What's up, everybody? It's Jamel Gibbs, your family-oriented entrepreneur. Welcome to another video. There's no secret that Elon Musk is buying Twitter. And in today's video, I'm going to share with you exactly how he's doing it with tax-free dollars and how you can do the same exact thing to grow your real estate investing portfolio. So first and foremost, let's talk about how Elon Musk came up with the $44 billion to buy Twitter. Well, as you know, Elon Musk owns millions and millions in shares of Tesla stock. And part of the strategy he used in order to come up with the $44 billion in order to purchase Twitter was to take out margin loans against his Tesla stock. Now, the reason why this strategy is so effective is because he doesn't have to sell all of his Tesla stock in order to get the money he needs in order to purchase Twitter. And in addition to that, he doesn't have to pay taxes on the money. The reason he doesn't have to pay taxes on the money is simply because a loan is not considered to be earned income. This is a strategy that wealthy people use all the time in order to buy more assets, continue to build their wealth, or buy whatever they want. You can literally take out loans against all of your assets over and over and over again as the value of your asset continues to rise. So by Elon taking out margin loans against his stock portfolio, rather than selling the stocks, he's preventing from paying taxes. The minute he decides to sell his stocks is the minute he's going to pay taxes on that money, because then it becomes earned income. So how does this all tie into real estate investing, and how can you apply this in your own investment strategy? Well, let's just say, for example, you own a property. Let's say it's a rental property and you were able to build up equity in that rental property over time. What you can do is refi cash out the money that's in that rental property tax-free to be able to buy what you want with that property, whether it's an asset to grow your real estate portfolio, whether it's to buy another investment, or let's say you wanted to do whatever you want with the money. You can do that by taking out a loan against the rental property and then allowing the equity to continue to build up and pull out money over and over and over again. Kind of similar to what Elon is doing with the margin loans, except you're doing it with a refi cash out on a rental property. So let's talk about how this works in a little more detail. So here's an example of how you can use tax-free dollars in order to grow your real estate investing portfolio. Let's say that you had a house right here and it's worth $200,000. You're able to buy that house for 120 grand. The reason you're able to buy it for 120 grand instead of 200 is because the house needs some work. You're getting it at a discount. It's in distress. So let's go ahead and break down the numbers. Once you buy that house for $120,000, you put $20,000 into repairs. Now, obviously, this number is going to vary based on how much work the property actually needs. But let's just say that this house needed $20,000 in work. So you put the $20,000 into the house and you're all into the house at $140,000. Now, let me go ahead and pull up my calculator for you real quick. So again, you got a $200,000 house that you're buying at 70 cents on the dollar minus the repairs. Let's say it needed $20,000 in work. So you're buying this house for 120 grand. You're going to then go ahead and put $20,000 into repairs to get the house up to par. Now, here's how you pull the tax-free dollars out. You can go to any portfolio lender or commercial lender in your local area, and they'll give you a loan based off of the $200,000. They'll give you up to 80% on that money. So that's $160,000. Now think about it. You have $140,000 tied into the property. When you refinance this property, you're able to pull out $160,000. Guess what? The difference between the $140,000 and the $160,000, which is $20,000, is tax-free money. So that $20,000 that you're pulling out of the house, plus the $140,000 that you're paying back to your original lender, or you're putting back into your bank account if you have the cash, all of that money is tax-free money. And here's the beautiful part about the whole thing. At that point, you'll be into the house with no money out of pocket because you got all your money back, plus an additional $20,000. But in addition to that, you still have the 20% equity in the property as well. In this case, it's $40,000 in equity. And here's the best part of the whole thing. You have positive cash flow, meaning somebody else is paying down your mortgage. Somebody else is allowing you to make a profit on this property every month that you can depreciate, and you still have the asset. This is exactly what Elon Musk did with the shares that he had in Tesla in order to purchase Twitter. And you can do the same thing by purchasing real estate at a discount and using that equity in order to be able to get tax-free dollars that you can then go ahead and buy more real estate with and continue to grow your money. The BRRRR strategy is one of the best ways to do this. There's obviously other ways you can acquire rental properties as well. Now, some of the caveats when it comes to using the BRRRR strategy is, number one, you're going to need either your own cash to buy real estate, or you're going to use hard money or private money in order to buy the properties up front. Then on the back end, you're going to need fair credit. Doesn't have to be perfect credit, but fair credit and an income in order to be able to refi cash out. Again, you're getting bank money on the back end, so you're going to need to show something to the bank in order to be able to get them to refinance this property for you. So those are some of the caveats that comes with the BRRRR strategy. If you're looking for a creative way to buy real estate where you don't need a lot of money and you don't need credit, check out my hybrid wholesaling program. I'll make sure to leave the link in the description box below. But make sure you copy what Elon Musk did. It was a powerful move, and this is something that applies to your real estate investing business as well. And if you want more information on how to do it, be sure to check out this video that just popped up on the screen right there. I'll see you guys on the next one. Peace.